Hello, good morning everyone. You are listening to Kotak Securities weekly fundamental podcast. This is Rini Mehta. Stock markets in India saw correction last week. Market participants remained cautious ahead of the union budget this week. Furthermore, the third quarter earnings season has also failed to enthuse the markets. The fall in BSE Smallcap and Midcap indices saw sharper correction compared to key benchmark indices like Sensex and Nifty. And on a sectoral basis, multiple indices declined last week in excess of 5%. On the other hand, BSE Auto Index showed strength, partly supported by positive market reaction to Bajaj Auto and Tata Motors' third quarter results. Globally, the US markets has remained firm so far. Data released by the US Commerce Department showed that the US economy grew by 2.9% in the fourth quarter. The US 10-year Treasury yields hovered around the 3.5% mark, and crude oil prices too remained range bound during the week. So guys, basically Union Budget and the Federal Reserve meeting are two key events for the equity markets this week. Now, if we look at foreign flows during this period, FIIs continued to be net sellers to the tune of rupees 29,232 crores so far in Jan. We believe FII flows will remain volatile. FPI flows in emerging markets so far were positive, except for India and Indonesia. South Korea, Taiwan, Thailand and Philippines witnessed inflows. Now if we look at stock picks for the week, first is the result update on Tata Motors. Tata Motors saw impressive domestic commercial vehicle segment performance and inline Jaguar Land Rover print. Consolidated EBITDA came in 12% above our expectations, led by first is better than expected performance of the domestic commercial vehicle segment due to richer product mix and raw material tailwinds. Second is higher than expected realization growth for JLR, that is Jaguar Land Rover business, owing to richer product mix and gradual recovery in JLR volumes, led by improvement in availability of chip supplies and steady demand conditions in the domestic market augurs well for the company. So we maintain ad rating on the stock with a fair value or target of rupees 450. Lastly, our pick of the week is United Spirits. United Spirits reported 3% year-on-year growth and 12% value growth in a P&A, that is Prestige and above. EBITDA margin declined 340 basis points year-on-year to 13.2% due to gross margin pressure. Now what we like is so four things. First is premiumization driven by Scotch. Second is cost saving initiatives that can potentially drive a 225 basis points margin expansion over the 3 years. Third is gradual recovery in gross margins led by price increase or raw material deflation. And lastly, an improvement in free cash flow generation and return ratios. So we cut FY23 to 25 EPS, that is earnings per share, by 3 to 12% and revise the fair value or target to rupees 925 from 965 earlier. Concerns are overdone, and the sharp correction in the stock price is an opportunity to buy to add the stock in your portfolio, guys. That's all for today. See you again next week. Thank you. Signing off.